Hey guys, welcome back to the channel. Today we're going to be discussing candlesticks as it pertains to technical analysis. And so I'm going to be jumping right into what a candlestick is and showing you some of the bullish and bearish candlestick patterns that we may find on the chart. I'm also going to jump over into Webull so we can look at some real life examples of some of these patterns. And hopefully you get a better understanding of why we use candlesticks to identify buying and selling opportunities when we're looking to trade or invest in a stock. So we're going to get right into it. Let's hop over to our candlestick patterns. Okay, guys, so I know that in my very first video, we talked about bullish and bearish terms. So if you are unfamiliar with those terms or have not seen that video, feel free to go back and watch that video and come back to this one. So we're going to start off with what a candle consists of. There are four major things that a candlestick will consist of, and that is all about price. So if we're looking at a bullish candle, which if we are reminded that the bullish candlestick or the bullish term means that we're in an uptrend or that there are more buyers, whereas bearish is more sellers or we're more in a downtrend. So the four things that we're looking at when it comes to a candlestick is going to be your high, your low, your close, and your open. Now, the high and the low doesn't change whether it's a bullish candlestick or a bearish candlestick. As you can see, the high is the highest price for that time period. The low is the lowest price for that time period. If we remember, if you watched the previous video I did last week, we talked about different time frames on a chart and how a candlestick could represent 1 day or 1 week or 10 minutes or 1 minute. So depending on what time frame on the chart that you're looking at will depend on what time frame the candlestick is showing you. Now, the differences between the bullish and the bearish candlestick are the open and the close. So as you can see, the open on the bullish candlestick is down here, whereas the open on the bearish candlestick is up here. So essentially, that also helps you to identify the color of the candlestick as well. So if the price is going to open at the start of that candle and then close higher, that's bullish, that's green, because it opened at a lower price and closed at a higher price. Versus on a bearish candle, we're looking at it opening at a higher price and closing at a lower price, which means it started off higher than it ended on the bearish side. And on the bullish side, it started off lower than it ended. So let's just say the price opened at $5 and at the end, let's pretend this is a 15-minute candle. So with the open of that 15-minute candle, the price of the stock opened at $5. When that 15-minute candle ended, the price of the stock was at $5.50. So it's green because it opened higher. Open lower than it closed, and the price of the stock is going up. On the flip side of that, let's say that the price of the stock, same 15-minute candle, but the price of the stock opened at $5.50. At the end of that 15 minutes, the candle or the stock price was at $5. So now we're looking at something where it opened higher than it closed. And so you want to just think about if it's opening at a lower price and it's closing at a higher price, that is bullish. That's going to be a green candle. If it is opening at a higher price and closing at a lower price, that is bearish. That's going to be a red candle. Now, these lines that are sticking out of the candle, out of the body of the candle, because this part is the body of the candle. But these lines that are sticking out, they're sometimes called, as you can see, upper shadows, lower shadows. They're also called wicks as well. And they actually tell a story as well, because essentially this candlestick most likely looked like a full green candle prior to it closing here. And so this tells me that sellers came in and pushed this price back down, because it was up here at a high and then it got pushed down and ended up closing here. So that lets me know that some sellers came in and push the stock price back down. Versus here, if we look at it the opposite way, we can say, okay, there's a lower shadow here. We could safely say that there were buyers that came in here and pushed the stock price back up, because this candle, while it was going through its price movements, most likely was just a big red candle before it started to place its different points where there's a high and there's a low, there's a close, and there's an open. And this will be something that will be easier to see during a live trading session when the candlesticks on the charts are actually moving. So I'll try to capture a video of that at some point where I'll be able to have the charts going live, and we'll be able to see the movements of the candlesticks and see how they actually move during a live market, where they start and kind of how they finish. So let's keep in mind these 4 elements of the candlestick as we look at some of the bullish candlestick patterns. So right now we have, and I'm not going to go over each and every one of these, but I just want to kind of show you some things that traders may look at to again, get into a trade or get out of a trade based upon certain patterns that the candlesticks will form that will let us know that maybe buyers are getting in or sellers are getting in, etc. Well, let's start off the top with these neutral candlestick patterns. Actually, this right here is considered a doji. Dojis are typically signs of reversals, and dojis can look they can look like this, but they can also look in variation of this. Like down here is also considered a doji type candle. Right here is also considered a doji type candle. It's just a matter of the shape of them and identifying what they may mean. So we have a neutral candle here, which kind of lets us know that maybe the buyers and sellers are like at a standstill. And then we have our spinning tops here, which is essentially kind of like indecision. We don't know which way the buyers and sellers want to go. So those are some of the neutral patterns you'll see at the top of a trend, like an uptrend, or at the bottom of a downtrend for these two. Now, some of the more popular bullish candlestick patterns are going to be your hammer, where this is basically saying that we've been in the downtrend, and then all of a sudden we had a lot of buyers step in to push this up, which is why you have this long wick, and then we turn right around and go into some green bullish candlesticks. So that hammer is almost like a sign of reversal from a downtrend to an uptrend. Okay. This dragonfly doji is another example of that as well. It's an even more powerful example of it because it's literally pushed the price all the way up to a point where there isn't even any green at all. So dojis are very, like I said, very powerful as far as identifying trend reversals. Let's see here. We'll look at Morningstar. Morningstar is kind of like this doji here. This is a doji as well, but it's one where it's identifying, more buyers that are stepping in versus it being more neutral up here because it has that green box. Even though the green box is small, it's still identifying more buying pressure there. And if we're looking at bearish candlestick patterns, similar, just kind of in a flip or in a reverse. So the shooting star is literally like the inverse of the hammer, if you can tell. Literally, we were showing on an uptrend, and then sellers started to come in and push the stock price back down, and then we jump right into bearish candles and into a downtrend. The gravestone doji is like the reverse of the dragonfly doji. Again, we were in an uptrend. We came up here being the high, and then sellers came in and started to push the price back down, and then we jump into a downtrend. Evening stars is again opposite of the morning star. So it's almost like, again, we're in an uptrend. There's some indecision here. But then when we see this red candle come in, we know that there are some sellers there, and we're in a reversal from the uptrend back into a downtrend. So you guys can study these. You can take a screenshot of this, study these patterns, as we go forward. We'll be talking more about them as we look at live charts. But I wanted to kind of go over some of these just to give you an idea of what traders are looking at when they're reading candlestick patterns. Now, I do want to head over to Webull. And let's see here. Okay, so guys, we're back on a SPY chart, and hopefully we can identify some of these candlestick patterns that we just went over on the candlestick pattern chart that I showed you guys. But I do want to also just look at this again as far as individual candlesticks and what they actually mean. So let's just take a look. We're going to zoom into one right here. So we're on this candlestick, which was January 21st, 2022. It's a random date, random candlestick. I just picked this one just because I'm on a weekly chart for the SPY. And remember, the SPY is an ETF that does track the S&P 500. So this particular candlestick has no wicks, as we can see. There's nothing sticking up at the top. There's nothing sticking out at the bottom. It's just a regular bearish engulfing candle. Okay, so we know that the high is here. We know that the low is here. But where's the open and where's the close? Let's see if you guys can identify what that is. Because it looks like it's very, very close to the high and the low. And actually, there's a very tiny small wick. You probably can't even see that, but there's a tiny, tiny small wick that's popping up out there. But it's so small that it's barely recognizable. But what this candle tells me is that the open and the low are extremely close together, right? And it also tells me that the open and the high are extremely close together. And the low and the close are extremely close together, which is why there's no wicks. And if we're looking at the numbers over here, we'll be able to see. The open was 452.40. The high was 452.62, so just 22 cents higher than the open. The low, $430.96, and the close, $430.99. So just 3 cents difference between the close and the low, which is why there's no wicks. If there were wicks, that would let me know that the low and the close were further away from each other, and the high and the open were further away from each other. But because they are so close in price, this is why you're seeing this candlestick look the way this looks. Now, if we go to the next trading week, we see that this one obviously has wicks going at the top and at the bottom. So again, we're identifying the high, which is up here. This is going to be the close right here because it's a green candle, right? Which means it opened lower and closed higher. So make sure y'all we get that. So this would be the open down here. And then at the very bottom of the wick is going to be the low. So let's just make sure that we remember how to read the candlesticks. This one should look familiar because we looked at this one on the previous chart. It was a hammer, right? And so this is what we would consider a doji. And this is also a doji. Remember we talked about dojis at the beginning of a trend reversal going to the upside, and we talked about dojis as a beginning of a downtrend as well. And this is actually a great example right here. You can see how it was going up, it's going up, stock price is going up, and it's going up. It reached a high here 456.11, which we can see over here again, which came up here. And then the sellers started coming in and pushing the price back down. Sellers started coming in and just pushing the price back down. The next candle we see is a red one. And so then we obviously see that we go back into a downtrend from this doji. So wanted to show you a few examples of that. Let's see if we can see any more examples that may be beneficial to us as we move forward. Let's look on a daily chart. What I also want to show you is certain things like gapping. So as you can see here, this candle, it closed at 372.42. And then the next day, it gapped all the way up. It didn't even, it left a spot to be filled here and literally just gapped up in price. So it closed the previous day at 372.42. It opened the next day at 386.28. That's a fairly big difference. And so when you find gaps like this in the chart, or gap ups like this is what we call them, you'll oftentimes find that they will refill that gap price later on in the chart. And so if we follow the chart, following along, we see that price did come back down and it actually filled this space. It filled it here because typically there's orders here. There's orders that people have already put in to be filled, and it essentially just skipped all of that. So it now has to come back down and fill those orders before taking, the trend back up. But that's another thing that traders look at when it comes to stocks, stock charts and candlesticks, is gaps in the chart, because those gaps typically are filled later on. So again, I wanted to go over candlesticks in a little more depth, so that you would have an idea of what the candlestick represents and how we use these candlesticks in our everyday trading. The next episode is going to be about support and resistance, as well as trend lines, and how we'll combine what we know about candlesticks with those different trends, support and resistance, so that we can really pinpoint our entry into a trade and our exit out of a trade. So that next episode is going to be really, really important, and it's going to go over a lot of more detail of how we marry the two concepts, the candlesticks with the support and resistance, which we can also consider supply and demand. But I don't want to make this video too long, so I do thank you for watching. As always, please like, share, subscribe if you haven't already, and hit that bell so that you get the notifications when I drop a new video every week. And I will see you all in the next video.